Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So if you are like me and you like picking individual stocks, you definitely need to have some high growth companies in your portfolio to get that balance. And if you remember, just in 2024, 2023, as well as 2021, 2020, those 4 years, the companies that outperformed the S&P 500, or even companies that have done absolutely amazing in those 4 years, majority of them were technology companies, tech companies, high growth companies, and you need those high growth companies in your portfolio in order to be able to either beat the market or actually kind of repeat similar to what the market has returned. And as you know, a lot of my basically best performing companies have been the technology companies or growth companies. And what I'm going to do today is share with you guys 5 different companies that are currently trading fair valued or undervalued. And these companies have businesses that are still doing absolutely amazing job. They're not really down because they basically the business is terrible business and not making enough money or anything like that. It's just because the sentiment has slightly shifted, and some people, or especially Wall Street, have kind of neglected because they found a new shining toy, which is Nvidia and so on. Now, of course, AI has changed the game, and there's a lot going on. And these companies, to be fair, are some of the companies that are relying this, Nvidias and so on, are relying on in order to be able to actually do what they do, right? So I'm going to share with the 5 companies, inshallah. But before we do that, a couple of things. If you haven't joined us in the Patreon account, please do so. Like the video, subscribe to the channel. Of course, if you can basically get access to the Patreon account, that would be absolutely amazing because it definitely helps the channel. And the other thing I want to mention to you guys is the fear and extreme fear basically right now. That's basically where we are. So the fear index, fear and greed index is right now extreme fear. Now, this kind of gives us an idea of what the average investors are thinking about right now. So it's just to kind of know where we are. But really, if you think about it, a few months ago, we were here, extreme greed, everything around, especially in November time. Everything was booming. The AI was madness and greed and free greed. That's basically extreme greed was where we were. And now it's shifting slightly back to extreme fear, which for us as the long-term investors is the best time to buy. If you remember in 2022, when the stock market was down a lot, that was actually a year where I was very quick to actually, buy max my ISA account, because it was the time a lot of the big companies were down. Some of the best in performing companies that I have in my portfolio, I actually bought them around that time. I'm not saying buy everything, but of course you need to know what you're doing, and you need to basically do your own research. Because right now there's a lot basically of fear in the market. People are thinking it's going to go down, it's going to go down. What if that happens? That for us, that's a happy day. For me anyway, it is definitely a happy day. And if you look at the S&P 500, for example, how it performed over the last basically year, you will see we basically just for the 1 year we are up 21%. So that's the S&P 500. So there is, even if we see a correction of 10%, 15%, 20%, it's not even gonna erase the basic last year's gains, let alone anything else. So overall, we are in a good place, and the stock market is doing well, and still very expensive. There are some companies that are very, very expensive. And what I'm gonna do now is share with you guys 5 different companies that I think, basically based on Morningstar valuation, are fairly valued right now or undervalued, and potentially might be good buys right now. And if you can ignore the noise and just think about it in the long term. Okay, now this is slightly too different what we're normally looking for. We're looking for the PEG ratio. We use PEG ratios because of the because these are basically high growth companies. It's better to use PEG ratios. We've got the forward P as well. We've got the profit margin, return on equity, return on investor capital. We want to see the free cash flow. We want to see the 5-year, basically the 10 years total return in 5 years as well. Some companies are slightly smaller. But the most important part for me in this video is the fact that they're undervalued or fairly valued, as well as the basically EPS growth or earnings per share growth and revenue growth. These companies are doing expected to grow double digits, but down a lot right now. So let's get started with the first one, and that's Taiwan Semiconductor, a company that I spoke about a lot recently. Now, some of you will come back to me and say, oh, you can't buy this in your ISA account, so in the UK. For some reason, I do own it, and if you've seen it, if you join us in the Patreon account, you will see me actually share the fact that I do own this company in my ISA account, the family ISA account, under the interactive brokers. So it is accessible there. So I'm not sure if it's not accessible. Of course, it's not accessible through trading 2 and 2, but it is on that one. Maybe it's because interactive brokers are very much international, so maybe they're allowed. I'm not sure. Find out a bit more anyway. And as you can see, they have 862 billion market cap right now, wide economic moat. Without this company, Nvidia will not be able to create the chips that they're actually selling right now. Those AI products that they have right now, they design it, they then send it to this company, which then of course makes it, right? So without this company, Nvidia will not be doing what it's doing. So in fact, if you want to play an AI play and so on, this will probably be one of the best companies to to buy it right now. So we've got EPS of over $6, P is about 33, forward P is about 29, and PEG ratio just below 2. Now what we're normally looking for is PEG ratio below 1. If you can find that, that's absolutely amazing. This data comes from Seeking Yahoo Finance and Seeking Alpha, whichever basically you want to use is more or less the same, and you can find that information for the PEG ratio. So PEG ratio below 1 tells us the stock is actually quite undervalued. PEG ratio basically below 1, okay, below 2 is okay-ish in my opinion. I've bought companies that were slightly around here, and they tend to be basically fairly valued at that point. Profit margin, we're looking at about 39%, return on equity of 28%. And return on invested capital of 23%. So when it comes to profitability and what management is doing, this is probably one of the best companies out there. Look at the free cash flow, $25 billion. First, I thought they were talking about basically Taiwanese dollars, but it's not. It's actually US dollars. Total return, we're looking at about 27%. Look at this, EPS 29%, revenue 26%. Again, this is just basically estimation. But even if basically these companies does 20% each year for basically for next year, that would be absolutely amazing. But $215 per share is where they think price should be. Right now is just below that. And if you go to Seeking Alpha, you will see basically Quant, Wall Street, as well as Seeking Alpha are all saying is a strong buy. And actually, if you look at the 12 strong buys, 4 buys, 1 hold, no sales whatsoever, and $231 per share. That's about 14% upside from where we are. So it seems very much basically undervalued at the moment. And if you look at the expectations moving forward, it is massive, basically 35%, 28%. So what I'm using right now, this basically 29% or 28.77 is basically for next year, 2025. So they still, I think they might still have one more. Let me just check. Q4 is coming up, so then basically the reporting end towards the end of this week, and that will be Q4. So that will mean basically we will this year, basically this is what it would have achieved the company, and this is for 2025, and the 2026 is even basically great, double digits again. When it comes to revenue, we're expecting 27 this year, 26 next year, 17%, and then there's a bit of a decline. Again, these companies are very cyclical businesses, as you know, when it comes to semiconductors. So basically that's what the analysts are expecting. That can easily change. The next one is another one that's in the semis as well, the AMD company that I feel like slightly being neglected, out of favor right now, but then again is one of those companies basically that it's got a very high beta. It can fluctuate, the prices can go up and down very quickly. It will be up 5% today, 6% down tomorrow, so you have to be careful with that. But generally as a business, okay, we're looking at 188 billion market cap, so it's a huge company. EPS just over $1, PE right now over 100, which is ridiculous. The forward PE though is about 34, and I think this is probably where this company shines. Look at the PEG ratio below 1. Again, profit margin, return on invested capital, it's not there yet, but I believe the next 5 to 10 years, if this company continues, I really like, I've been watching a lot of videos on the basically lately about the CEO, and because this is one of the new additions to the family portfolio, and looking at this company and looking at the CEO and the fact that basically Lisa Su has been there for quite some time and is very passionate about technology. And when she talks about, it's almost like basically the CEO of Nvidia. They're both very similar people in terms of technology and how much knowledge they have about the companies and the technology they actually basically trying to deliver. That is amazing to me, because you get companies where they have CEOs that really do not basically have not even got background in that basically in that side of the world, but these people have a very much working knowledge of basically what they do in the day-to-day, which is really great. So free cash flow $1.5 billion is not a lot, but it's decent. Total return in the last 10 years, we're looking at about 46%. Look at this, EPS and revenue 52%, 26%, 27% discount right now. $160 per share is where they think the price should be. And if you go back here to basically AMD, we can see basically Wall Street is actually saying 28 of them are saying it's a strong buy, and then we got 6 buys, 13 holds, and 1 strong sell. Now $177 per share is where they think the price should be, over 15% an upside from where we are now. And if you look at the earnings, which I've just shared with you guys, you can see this is what we're expecting next year. They will still also have one more quarter, I think, to report, if I'm correct. In fact, we can just quickly check that. What is it there? Yeah, Q4 is basically what they're reporting next. So they're expecting double-digit growth for the next 4 years, if you think about, and when it comes to both revenue and thing. So very cyclical business, but we will see where it ends up. But a really great company. The next one is another one that I genuinely feel has been neglected. People are talking about all types of AI technologies. Now, we basically use Adobe products. I promise you, we're not going anywhere anytime soon. I promise you, the company I work for the next 5 years, we will be using their product no matter what. We don't even question what's out there. We just basically renew our subscription. And I like this, basically the SaaS model. Okay, where you got that subscription model where you just basically going online, downloading just a file, install it on your machines, and then you've got the subscription, and then you just renew it. You don't even think about it. They take out from your credit card, and that's it. Okay, we used it a lot, and I genuinely don't think anyone that I've got a lot of people. Basically, my background is computer science, and I've got a lot of people who are working in the different types of industries that use this platform, this software this company creates, and every single person is saying, do you know what? Credit to the company, they're actually making things better for them, right, in the long run. So I don't think this company is going to run out business, and this is a great opportunity for us as investors to look at this company deeply and hopefully start investing before it's too late. 179 billion market cap, and current price you can see just basically over $400 per share. And current PE is slightly expensive. The forward is very low, and the PEG ratio just below 2, which is absolutely fine. Again, when it comes to profitability, return on equity, return on invested capital, things like that, absolutely amazing. Nothing to worry about. $7.8 billion of free cash flow, 19% total return in the last 10 years, and 13% and 12%, 10% in terms of growth expectations for EPS and revenue, right? Which is absolutely fine. Again, double digits, and 31% discounted right now. $590 per share is where they think the price should be. And again, looking seeking alpha, we can just have a look at. We got 18 strong buys, 8 buys, 10 holds, 2 sales, and 1 strong sell. And $576 per share, 40% upside from where we are. And earnings expectations, when we look at this company, we're looking at basically in 2026, we're looking at about 12%, 11%, 9%, and so on. There's a few analysts looking. If you just even focus on next 2 years, there's absolutely nothing in terms of EPS, in terms of revenue, almost a double digits as well moving forward. So again, absolutely nothing to worry about in my opinion. Another great company. But I'm not saying just go away and buy it. Please do your research. And if you haven't liked the video, please do it, because it makes a huge difference. Now, the next one is Micron Technology. This is probably one of the companies I might have to look at it a little bit deeper, because maybe in another video, because there's a lot of brothers who have been asking me to look at this company. And every time I look at it, there's something that's holding me back. I'm like, what is going on? But now, look at the growth for this company. It's absolutely ridiculous. 64%. EPS growth for the next year, and then 28%. If fairly value right now 100 is where they think the price should be. Right now it's about 94. Now in terms of profitability and things like that, it's okay. It's kind of AMD style kind of company. Free cash flow very, very low in my opinion, for over 100 billion, but you just can't even make. Now that makes me wonder. And what we're going to do now quickly, just maybe we'll do another video of the whole company. If you want me to do that, just let me know. But looking at the revenue, $16 billion, right? And look at this. Okay, look at the cost of that revenue. 29 they've made, 20 billion of that was the cost of that revenue. That basically they have got gross profit about $9 billion, right? Then of course this is basically one of the companies, research and development. They're spending quite a bit. The sales and general administration side of things, all that added together, $4.5 billion. And then the net income, we got about 3.8, which is absolutely fine. And this is actually massive in comparison to where it was last year. So I'm hoping that this is getting better. But look at how cyclical this is, okay? 2.9, then is a decline of basically 275 million, then is 5 billion, then is 14 billion, then is 6 billion, then 2.6, then 5.8, then 8.6, and then there's a massive drop again. Then again, it's basically, so we were in the negative by almost $6 billion free cash net income. Then we basically made a little bit of a net income, about less than $1 billion. Then now we've got 3.8. So it's very, very cyclical. I would love to know. I want to dig deep and find out more about the company, because this is very interesting. 2.7 to $2.71, and up and down. Right now we're about 3.5. Okay, so maybe we'll do another video about this company, but it is one of those companies where, yeah, it's just bit all over the place. And if we look at the earnings expectations moving forward, this is probably where this company shines, like I've already shown you. So this year, look at this. I think they've got one more, two more. I think 2025 they probably started already. Yeah, two, basically Q2 and Q3 and Q4. They so just started basically that cycle. They're expecting 434% growth in terms of year-over-year growth, which is absolutely crazy, right? But I wonder where they were last year. That would be interesting to find out, of course. But 62% up in 2026. Then it's a decline. And then when it comes to revenue, 40, 27, 28, decline and a decline. So very cyclical again, because it's the semis. These companies do tend to do this type of things. Now, final company is Uber. Uber is another company that genuinely right now, I really like the business model. I like everything about the company. I like what they're doing. I like the growth. Free cash flow is growing massively, which is really, really good. But my concern about this company is how many, outside the US, how many apps are out there right now that you can think of, wherever you are in the world. Okay, put it on the comment section, the comment basically section, right? If you live in another country and there's equivalent of Uber app out there where people are using generally, and generally there's so many. Like I said before, I think I've talked about this before, when I went to Thailand, when I went to Singapore, when I went all of these places last year summer, and even Greece, we found an app that was local. The locals were using basically a cheaper app and better app and whatever. So that's my only concern. But generally, it's a great company. Look at 23% EPS growth, expected revenue about 16%, fairly value right now 70. Let's call it about $80 per share. Right now it's about 65. When it comes to PEG ratio, it's quite low. And as you can see here, we've got quantity saying strong buy. Wall Street is very bullish on this company because look at 33 strong buys. Okay, we've got 13 buys, 9 holds, and $89 per share is where they think the price should be. 39% upside from where we are right now. And if you look at the earnings expectations moving forward, 115% in 2025. I think they've got two more quarters to report. 23%, 41%, 23%. There's a lot of analysts looking at this company. All of a sudden, the people just looking at this company, 17%, 15%, 15%, 12%. So another really good business model. And but my concern, like I said, it's outside the US. Will love to know, just to dig deeper, maybe find out how much of their revenue just comes from the US in comparison to other basically countries and so on. Now let's have a look into the Sharia compliance side of things. Absolutely nothing to worry about. A lot of these companies you will find, especially tech companies, they have interest-bearing securities, interest-bearing debt. So both of them are very, very low because of technology companies. They don't actually get into a lot of debt if you think about it. But yeah, those are the companies that I wanted to share with you guys. If you still haven't joined us to the Patreon account, like I've always said to you guys, it makes a huge difference. If you can't join us, if you cannot, just like the video, subscribe, share it with your family and friends, because it makes an absolutely huge difference. Like I said to you guys, I don't actually own any of these companies in this portfolio here, but I do own these 3 here. Okay, all 3 of them are in my family portfolio. If you want to check that out, come and check out here, inshallah. Have a wonderful day. Assalamu Alaikum.